Good morning, good afternoon, good evening, whenever you're listening to this week's video. What up, y'all? Thank you for everybody that reached out and wished me a happy birthday last week. I truly do appreciate it. I am so grateful, as I told you all, to be able to have another year in front of me, to be able to kind of plan out, be able to serve you all in the manner that I'm able to serve you, and to have my team, my wonderful, awesome team of ladies, and my son help this business be what it is. So I'm grateful to everyone, all the shout outs, all the songs. My business bestie called, some of my good girlfriends called, and then I'm so grateful to my husband who actually took me out on Friday night, took me to dinner, and took me to a basketball game. Yeah, so I'm a huge basketball fan. Have been a huge basketball fan for the longest time, right? So like my dad used to coach basketball, my brother played basketball. I attempted to play basketball. Yeah, just the sport does it for me. However, to see an NBA game, the seating was wonderful. I was 5 rows back from the floor. That was amazing. However, to what the game was more, y'all. NBA basketball just ain't what it used to be. Like college basketball, high school basketball, all these everybody, all this zone and shooting 3 point. Y'all. But I had a great time. I really did. And then it was cool to be out like, past my bedtime and eating Five Guys fries at like 9:30 at night, like I'm a freaking teenager. So yeah, it was cool. It was dope. It was a dope experience. I'm all about the experiences. And y'all know for this year, I even stated that my focus for the year is to rest and to live. Like those are my key words. So I have to remind myself, are you getting enough rest? Are you living? Are you in the moment? Right? And so that's what I've been focusing on. And that was one of those times that I got to be able to do it. So we back in action. We full fledged. We in it, like we got our countdown. We got our 3-week countdown to the individual tax deadline. We made it through our other tax deadline, and we are working hard here at TTE. But I want to break some stuff down for you all because I'm noticing in my review, in my conversations with clients, questions that are being asked of me, I want to break some stuff down, right? So I need y'all to know the difference between what's reportable and taxable. I already told you they know your business, right? Because everybody done snitched on you. Your brokerage company done snitched. Your boss done snitched. The person you doing independent contract, they all snitched on you already. They know how much money you have made. Period, point blank. They know. They know the income. They don't know the expenses. But this is the deal. Because they know the income that was reported, and y'all know a long time ago I told y'all that the definition of income for the IRS, gross income, is from any source derived. So if somebody reported it on a required form, baby, they know. But some information is reportable and not taxable. And so we're going to go through that this week. I want y'all to understand the difference. That some things are reportable, meaning that we got to tell them because they already know. But everything ain't taxable. So let's look at this infographic that my what is this? It's not even an infographic. This quick snapshot, right? That my team has built. All right, so definition, reportable. It's the info that the IRS needs to know. How much of the money do they need to know? Taxable. This is the income that's going to be taxed. Y'all know if it's me, I'm breaking stuff down on a tax return for you all, and I'm telling you what this is. Hey, we had to do this, and this. This is taxable income versus what's not taxable. Like I go through that whole spiel. Then y'all got to understand the scope of what all this is, right? What does it cover? That's what scope is. All right. What is the terms of what we're doing? For reportable, it includes all income that's any source derived, even if the income is not taxable. Now I'm going to get to that in a minute. So I'm going to give you an example momentarily. Now, for taxable income only includes the income the IRS says you owe taxes on. So sometimes we put it down, but we don't tax it. All right. What are some of those examples? Gifts over $17K, the Roth IRA distributions, or a Roth rollover. Life insurance payouts, those proceeds are not taxable. Sometimes forgiving debt, depending on what it is, so like your student loans, People who got that student loan forgiveness, we had to say, but it was not taxable. We might have to say, hey, you know what? I got forgiven for it, but ain't none of it taxable. Sometimes when you forgiven for credit card debt, though, you get that 1090, you get that 1099C, they gonna tax you on that. But there's sometimes that stuff is not taxable. Sometimes when you sell your house, the capital gains on it, depending on what the rules are, sometimes we always gotta report the sale. But if it was your primary residence and it's up to a certain limit, the capital gains aren't taxable, but it's reportable. Okay. Now, taxable. W-2 income gonna always be taxable. Self-employment income gonna always be taxable. They gotta get that self-employment tax. Interest income is going to always be taxable. Profits from rental stuff is always gonna be taxable. Don't be trying to get away from it. Hey, I don't want to pay taxes because on the internet they telling me everything I don't have to pay. That's not true. That's not true. Now, the instance is this. Some reportable information may increase your bill, but some of it may not. If it's taxable, baby, you pay a tax on it. It's going to increase your tax bill 100%. That's because it's a direct impact. This is what we talk about, taxable income. Why do we have reportable taxable income? It's about transparency. It's about transparency versus the taxable income. It's about you liable for this money. You liable for this taxes. So what does that mean? What does all of this mean? All of it means is this is why my organizer is so freaking long. Because I need to know all the information. Why? Because let's say we forget something and the IRS has some documentation that we were unaware about. They're going to send us a notice and say, hey, I think you underreported. Whoa. And I normally find this when it comes to 1099Bs, right? So capital gains tax. Maybe you didn't report all that. Or maybe it's an interest statement that you didn't get, but they maybe got $13 on it, so it was reportable and you forgot about it. Not anything malicious, right? The biggest thing I do see is when we do 1099Rs and you're doing a rollover. That is one of the, I got a report that you took money from one custodian to the other. But then you'll see that code G on that 1099R, meaning we did a rollover and none of that is taxable. So I have to report it, but it doesn't show up. And so y'all hear me on the tax return explain that. Hey, this is how much you had in pension that we took out, but this is how much was taxable. You'll see that. Sometimes you'll see that a lot of times when it comes to qualified dividends, when we talk about dividend income and interest income, you'll see that break too, because sometimes proceeds for state municipal bonds and things like that, it may not be taxable. So I gotta know all that, but I gotta tell them because, hey, they already told them, hey, you got some income on it, but we gotta say, look, they did get income, it's reportable. We're not trying to hide it from you, but it's not taxable. And then the same thing for gifts. Hey, I got something, but it's you know, they got to do a gift tax return over there. That person who gave me the money. It's not revenue to me. It's not income to me. It's not taxable to me. But I ain't gonna lie to you and tell you I got a gift that was higher than the amount that's reportable. You know what I'm saying? So you got to tell me that type of stuff. So you got to tell the tax people that type of stuff because you don't want there to be no issues down the road and the IRS, because they want their piece of their money. They want what they can get. So I want you to keep that in mind. I want you to keep it in mind. There's truly is a distinction between reportable and taxable. You can't be out here having secrets. You can't. Because 9 times out of 10, for the income, they already know that joint. Then we in a whole hassle. And now you like, but I don't have the money. Well, you should have told me that so that I could have reported it so we can see and deem if there's something that we could leverage in the tax code. Okay? So there is a distinct difference. And I want you all to know that. This is the T. We gave you the real T on reportable versus taxable. And I want you all, as we're planning for 2025, because 2024 is gone, baby. We're reconciling it. But as we are in 2025, I want you to be like, wait a minute. Is this transaction that I'm doing as I'm moving forward, is this going to be something I got to report and pay tax on? Or is it just going to be reportable? And if you're not sure and you working with me, hit me up. Send me a message in the portal. If you got to have a consult, I will tell you. If not, I may make it a weekly video so that everybody can benefit from it. Right? So I'm not out here just trying to do consults to do consults because that's time. That is time. And I'm going to get compensated for my time. But if it's something like this that everybody can learn from, I am going to make sure that enough people get this information so that y'all are empowered to make the moves that are best for you and your household way before we get to the end of the tax year. All right? And we know that things are moving and things are changing. I don't feel like they're changing every day as much. Maybe it's because I'm ignorant, because I'm not tapped into everything like I was. But we know there are going to be some changes, and there are going to be some things that you need to be aware of that's going to impact you. And so I need you to know what's happening. And I, as the tax cop, are going to be here to tell you as it hits the street. But this is something I definitely said, hey, we got to talk about this, because I'm running into it as I'm reviewing tax returns more and more. And people are asking questions that y'all don't know the difference between reportable versus taxable. And y'all need to know that, hey, we got to cough up the information, but all of it don't mean it's going to be taxable. If this was helpful to you, let me know. If you want me to expand even more and this got you to asking more questions, let me know that as well. I want to be able to be in your inbox every week and tell you things that you can leverage, that you feel is going to make a difference for you and yours. Until next week, peace, y'all.